Mutual fund investments are subject to market risk. Read all scheme-related documents carefully. Namaskaram. Today another podcast, and I'm with Amar Shah. He's a chief business officer at ICICI AMC Asset Management Company, and I'm so excited. I always have a great respect to ICICI as a company, and AMC I am associated with. From the beginning, we started mutual fund business, and finally, I got a chance to sit across a senior from ICICI, and I'm super excited. Welcome, sir.
Thank you so much, and it's my pleasure and honor, and thank you for inviting me on this dais.
Okay, thank you. And Amar sir, I started ICICI journey in 2001.
That's correct.
And plus 25 years plus experience in financial industry itself. And so if you can talk a bit of it about your experience, from there we can take it.
Sure. So the only experience that I have is mutual funds.
Okay.
I have just worked in this sector. Mm-hmm. I have worked in two organizations. Like you said, in 2001, I started my career with ICICI. Mm-hmm. For a very brief period, I had moved to another AMC, Aditya Birla.
Okay.
And now, since 2013, I am again back with my original company where I would have started my career with. So the only area of business and the only, the line of product, if I can use that, is mutual fund. I've been with the asset management company all throughout my entire career.
Okay, that's great. So just to understand for your career progression, what was your first designation? And now the chief business officer, but it's a great progression, right? Yes. So what was your beginning?
So in 2001, I was a campus hire.
Okay.
I postgraduated from Narsi Monji Institute, NMIMS.
Yeah, I know. This is I think after IAM, right. NMIMS give more people to stock market, I think.
Probably. I don't have any data. But
I don't have any data, but when absolutely. I interview people,
yes,
many people come from that college.
Yes.
I have visited that college multiple times.
Of course. A lovely campus. So I joined as a management trainee in 2001. Right, and in 2001, this was quite new. It was evolving. It was emerging. So you were lucky. You were blessed to see the whole transition that you've seen as far as asset management business is concerned.
Okay.
Yeah, management trainee and
then from management trainee to CBO.
Yes.
Yeah, great. Yeah. And it's an inspiration because there are a lot of people watching this channel, and maybe their children are getting into finance, right. Or there are a lot of youngsters going for MBA or planning to take up a BA. So they are seeing you. It's an inspiration to see that I can also reach this kind of a level.
Certainly.
Yeah.
Thank you,
sir. So when we talk about this entire podcast, what is our purpose is that first is that how mutual fund is evolving and how stock market is important in a person's wealth management.
Right.
At the same time, you have experience working with family offices and rich how they invest. So what are that differences they do in terms of investing? So these are the things which I keen to learn from your experience.
I'll try my level best, and hopefully something new may come out, if at all. But your first question, how is mutual fund evolving? I think the proof of the pudding is the kind of AUMs, the kind of inflows, the kind of SIP book, the number of customers, the count, the way that has increased, right? Mm-hmm. And beautifully, the regulatory framework is fantastic. Absolutely conducive for the investor to invest. So as a platform, right, it's I can get into basics, but I think that without getting into that, I would only say that it's doing very well. So it's growing. It's growing, and it's a fantastic vehicle for a common man. And today, when you look at the line of products, the innovations that have happened, the cost structures that have got built, the regulatory framework within which it operates, it goes and addresses a small ticket size of 500 rupees to an infinite amount of money that anybody wants to invest, because that's the kind of line of product. So that's my view on mutual fund side.
Okay.
Right. Now your second question was that what are the rich?
How the rich invest here?
How the rich are investing, right? And that in between, before that, like the importance of stock market, right? I would say that instead of stock market, let me put it that it's extremely important to be disciplined in terms of investing, right? That's the basic foundation. And equity is one of the asset class, right? So there's a larger chapter that I'm sure you would have done and you'll be doing, is that eventually it's an asset allocation, and you should have weightage to all the asset classes depending on your journey, your risk profile, so on and so forth. Now narrowing it down to equity, I think of course it has a role to play, because you're becoming a shareholder into a particular company, and if the company does well, right, if company compounds its profits and business at a particular growth rate, then ideally the stock price also has to mirror to that extent the growth rate, a very theoretical way. India is growing. Corporate India is doing very, very well. Of course, there are cycles that keep on coming into businesses, but by and large, we are a growth economy. And hence, the market also to that extent will mirror. And if that has to happen, then investing into that market through mutual fund as a vehicle or direct equity as a vehicle. I mean, let each individual choose their way of investing. I would like mutual fund as a way of investing personally. I think that the equity has a very, very big space and a very big role in long-term wealth creation journey of a
So you can really say that wealth creation and mutual fund play a huge role, especially equity mutual fund play a big...
Equity mutual fund has to be part of your portfolio. Of course, there has to be a time horizon, there has to be risk assessment, so on and so forth. But yes, it should be part of your portfolio if you want to move towards your wealth creation.
When I was listening to a couple of podcasts you have done before and all. And you were talking highly about asset allocation. And you were very specific that, how a person should give importance to asset allocation, all those things. So if you could really take a few minutes explaining what is asset allocation for you, and how people like me has to give importance to educating asset allocation.
Of course. So it's very, very simple, sir. That look, every asset class has a role, has a cycle, has a risk-reward payoff, right? So whether you talk about debt, there's real estate, there is equities, there is gold, silver, commodities to that extent, right? And all asset classes have their cycles, their pluses, their minuses, etc., etc. Now, at any point of time, can anybody ever say that, no, this is the only and the best asset class for perpetuity? If you would have said that about gold a year back, right? Just a year back, you would have fallen flat because it went and outperformed all the asset classes. There are cycles for real estate. There will be cycles for equity. So important is that, look, as a customer, it is like a wholesome meal in a very, very layman's language, right? You are not only on proteins or not only on carbs, for example. You will need a balance of all of it. So I think that in your wealth creation journey, in your life stage or in your entire life cycle, at different points of time, different asset classes will do. So how do you balance that? How do you blend it? And for that, there can be risk assessment, there can be risk tolerances, there can be income levels, right? There will be n number of data that you will see capture. And broadly, you will say that, look, I should have a right mix of asset class basis my profile, basis my risk appetite, basis my income, basis my age. So there can be various factors. But we genuinely think that asset allocation has a big role to play.
And we have now mutual fund, everyone knows. Thanks to a lot of campaigns. Thanks to a lot of podcasts like this and everything. And still we have sometimes a gap that should I do it all myself, or to do this, why I need another person's help. So what is your take on that? Who should do themselves and who should really take the help of other people to do this investing?
So, well, I can give a very, very straight answer. Look, if you know it, and investing also needs time, right? Because you have to research it. You have to be sure before you are putting in your money. If you have that kind of a time and those skills, and you, of course, I'm sure there are platforms and there is a way to do it is accessible thanks to the entire digitization that has happened, then you should do it.
Mm-hmm.
I genuinely believe that it's not a subject which is easily understood, right? So investment is a complex. Sitting here it looks very, very simple, but eventually it's a slightly complex subject. It's not something that we have learned in our school as a subject, right? And because it's complex, it's if you should have somebody to keep on advising somebody, because it not only involves maths, but it also involves a lot of emotions, right? Behavioral part of it. And hence, sometimes I think if I have to advise, I always think that there has to be somebody behind you to watch out, to control the behavioral part of it, to maybe just tweak the path that you're taking. And hence, I think that advice is a must.
Okay.
Even people, I think, this is what I think, that even when people do it directly, subconsciously they are taking advice. So they are following something, right? I'm sure, for example, and let me now question you back, right? You do so much of podcast, you do so much of interaction, you do so much of education, right? Today, people will be listening to you. Subconsciously, they will be taking actions, right? So, for example, my question to you is today, while there's so much of advice and knowledge series that you've been building so far, actively, how many families today literally you are advising in terms of who take advice from you? So they not only listen to you as at a concept level, but actually make you part of then the execution in the journey. Like, what's the kind of number that you today actually advising?
So we have 15,000 clients.
Wow.
So that means both put together mutual fund and insurance and stock broking directly through broking.
Right. So there are 15,000 lives or 15,000 set of people, folios, of course, slightly lesser number of families maybe. But is where you actually are helping them create wealth, advising, tracking, monitoring, etc.
So that is a good blessing also.
Of course.
And mostly people are like first time investors, so they may listen to videos.
Of course.
Then they contact us.
Of course.
Then they just may start with a smaller ticket SIP.
Sure.
So starting SIP is just a nursery.
Of course.
So I have another name also. Like people always think that I do only SIP.
Right.
But SIP is a admission to your kindergarten.
Of course. That's the starting point.
That's the starting.
That's the opening kit.
And sometimes even we have also tendency that people say that shall I do stock directly or a mutual fund? Which one is good and everything? So. Always our advice will be that let's start with the mutual fund SIP,
of course,
or start with the mutual fund. Then let them kind of see the fluctuation or see how it work and everything.
Sure.
Then once you build a certain kind of amount in that kind of investment, we will move on to maybe direct equity kind of a thing. And the same thing, insurance, we need to make sure that health and time you taken and protected. So those things we kind of manage it, and then slowly depends on the wealth grow. We introduce new things.
So you're making it sound so simple, but I am very, very certain, right, that it has its own journey and the complexities that you have to deal with, right? Because when you deal with 15,000 people, everybody is at a different life stage, different life cycle, different level of income, and Yeah, different needs, different goals. So you're doing a complex job.
Yeah, definitely. Yeah. See, this is again confused. Like, when you said that complex, I was just noting down simple versus complex. Okay,
Right.
Our aim is to make entire finance into simplified this thing.
Absolutely.
And the biggest trouble we also face is that I sometimes see that. I may do a video, and I thought that is a simplified, way to how to take loan and build and everything. But I know that most of the time I won't be doing 100% ifs and buts and everything.
Right.
My videos only maybe 50% or 75% I'm really conveying.
Right.
I'm not really trying to hide anything.
Right.
But you don't know, right? We are doing a general content, and you don't know what is that person's profile and everything. So when they listen and do it,
Right.
I can really see that what I intend to tell and what they take it.
What real? Yeah.
I think whatever simplification you do, sometimes it become complicated also.
Of course.
So I tell people in my team, when people call,
Right.
So you should understand that what background they come from, and they will be maybe 75% or 95% very clear what they are talking about. But that 10% extra you need to build and make sure that they take the right decision.
Of course.
So
of course.
that is sometimes it's a complicated thing, because you tell something with one intention, but the audience may not take in the right direction. That is also a challenge which we are facing.
Of course.
But when they become a client, and when we understand that person, what is the goal, or even if goal is, let's say that for 15 years,
Right.
and that person may not like seeing the fluctuation a certain way.
Yes.
Or some people are ready to see the fluctuation,
Right.
and some people believe that they can see the fluctuation, but actually fluctuation comes, they may not be comfortable.
Right. Yeah. You thought you can digest or you can stomach it, but when it actually happens.
Yeah. So you may tell that, see, we are prepared to see 50% correction.
Right.
But when forget about 50%, 50, when the 15% correction happened in 2024 September itself.
Sure.
It's not the way people really reacted.
Right. Right.
So these are challenges. Guiding them and maybe hand-holding them, it is a problem. I also face a problem because surely I'm not really talking to all the clients.
Of course.
I have built the team.
Of course.
To do that, right?
Of course.
So communication always create trouble. But there are so I always tell that it's a partnership with the client and my team, right? So that way, each one has to show certain behavior.
Of course.
So that again make us successful. So we also want them to behave certain way, and they also want us to behave certain way.
Yes.
And maybe the return may not be the parameters to discuss. That is an outcome.
That is the outcome of decisions and behavior, right? I mean,
so that behavior part may be the critical conversation we should have. So those areas, it's keep on evolving. Our relationship also getting matured,
Right.
and they also know that when to involve us.
Right.
It could be buying a car.
Right.
Or it could be taking a home loan.
Right.
So those things, it's a very important, because if someone goes to a loan partner, giving loan is not a favor. It's they're selling a product.
Right.
So assessing that whether that is a capacity of that person to do that EMI from that current income.
Right.
It's assessment of so many other parameters.
Of course.
So those areas we always need to reassess and calibrate and get it done. So those things are involving a lot of, like you said, the behavior thing and like you said, time and skill.
Right.
Because when you do treatment for your body, there is even though you have skill, there is a problem.
Of course.
And another problem which we are seeing is that time is another concern. So there are people. I had a couple of investment advisors working in big corporates. They become my clients, and then I got surprised why he want to be my client.
Right.
But what he said is that I'm busy with my own clients.
Of course.
They were managing some family offices in Mumbai.
Right.
So, and he said that our life is at full-time busy there.
Correct.
So
Correct.
I don't have a time to do at least 50,000 rupees SIP.
Right.
Then he was putting all money in FD.
Right.
But the moment immediately he increased his AUM. The
Right.
only reason is that he know that somebody is watching, so he was comfortable.
Absolutely.
So those experience we have always seen, and it's a natural way we do it.
Yes.
These are our experience when we do it. And another question I have is that how a rich investor, because in Kerala we have a rich, but in Kerala we have a lot of bias towards their own business. Or investing in direct business, or real estate,
right,
or gold,
right.
And we need immediate kind of a return, kind of a thing.
Right.
So those were challenges. But how you see you have seen across India.
Right.
So what are the trend you are seeing? How rich is investing?
So I think one thing that, and this is purely my observation, I do not have any data to back it up right now. But I think the customer is getting more and more educated.
Okay.
The investor in this case, right? And that's because people are seeing cycles. People have experienced. There is so much of data content is available. Like for example, today you are creating, and I'm sure that you're taking one more step today to add something in terms of value. So by and large, the investor is a better decision maker and behaviorally perhaps better than relatively what it was. Because I've seen now 24 years right now, right? Coming to rich, right? I think that there is immense amount of focus that they do on asset allocation. Look, because you're already rich or you have wealth, for example, right? And after a point of time, the objective is not necessarily to just multiply the wealth. There is preservation, there is legacy, there is transmission, there is how do I create, because I have reached at a particular point. So what I have seen in that space is that there is truly a lot more focus on asset allocation, right? And there is no love and obsession necessarily to a particular asset class. For example, what you said is that, and again, I do not have a data, but you said there is love for real estate in Kerala. There is love for gold. Right? Now, look, you can be very happy if you were excessively invest into gold right now. But if I had to rewind your life 2 years back, 3 years back, right? For a very long period of time, you had suboptimal returns.
Yeah.
Just because the NAV, while the gold price is public information, but there is now only an emotional connect. It's not necessarily a best financial decision that you've taken. It's an emotional reason for which you still continue to hold on. And that's where I go back to beer. So coming back, I think over a period of time, that rotation between asset classes, sometimes take a view, forward-looking view, and you will always go overboard. So if you formed a view on gold a year back, you would have added gold more and changed your asset allocation in the favor of gold. Sometimes in the favor of real estate, sometimes in the favor of equity, sometimes in the favor of debt. It's a fantastic asset class, right? I mean, everything is the function of standard deviation, volatility, and then risk-adjusted returns that we talk about. So that's one thing that I'm seeing. I'm seeing a lot of openness to different vehicles of investing. So traditionally, look, gold was bought physical. And today it is available in an ETF route, it's available in a fund of fund route, right? And you're seeing that people are accepting that route. It's not that I need to see the metal in my house. I am okay holding units to that. On the people are, so just like that vehicle, from buying physical to digital, buying real estate into a AIF format.
Okay.
Right? Whether you want to buy a yield based
AIF means like 1 crore minimum investment and alternate investment.
But we are talking about wealthy people.
Wealthy people, yeah.
We are talking about wealthy people.
So
we are talking about rich.
Is
1 crore rupees,
yeah.
right? So people are open. So people are open to buying mutual fund. People are open to taking the PMS route. People are open to taking the AIF route. Of course, there will be people who will also do it directly on their own. As I said, subject to maybe they have somebody who's doing the research for them and advising them, so on and so forth.
Okay.
So two big points, and I'll just summarize that. I think the asset allocation focus continues. As I get more and more richer, it becomes more and more important that I do asset allocation.
Okay.
Because my motive is not to massively multiply my wealth, but many times also to preserve my wealth. And then there is openness to a lot of different ways to invest. So for example, I will not say that mutual fund is the only way to invest. I will say that, look, I want something more customized. I want something more concentrated. I want something more differentiated. And I will choose a PMS. I will choose a AIF. And it is never or. It is always and. Yeah. This is also a way to invest. This is also a way to invest.
Okay, so that is again give a room for diversification and see, when it comes to we spoke about AIF route for real estate, right? So that is in AIF, especially when we do it, is it loaning for real estate or becoming an owner and getting the income from there?
It can be both. So it's a function of what you have launched as an offering. What does your SID permit you to do? SID permits you to do But there will be AIFs that will be available which will be investing into real estate assets which will generate rental income out of it. Right. So you actually own the asset. The asset is leased out. There is somebody who is using that space, and then the income, the larger form of income is rental, and then you also envisage or look forward to some bit of a capital appreciation as and when you exit the asset.
Okay.
There will be real estate products which will invest into projects from the development phase, and there will be lending in the form of debt to a real estate sector.
Higher rate of interest.
So depending on whom you're giving and etc. So without getting into nitty-gritties, right? All I'm saying is that the entire spectrum of real estate. So whatever you think as a customer, I want to do when I look at real estate.
Okay. This is more than REITs.
REITs again is another form of participating in real estate.
A little more complicated than or how do you put it? REITs, real estate.
I would put it that even here it is a unitized form where it's a pooling concept, right? Okay. Eventually REITs is what? That there is set of assets which are pooled in together, and then on another side it's unitized, and then there is a customer who's buying that whole pool, right? Over here, you are giving the money to AIF, and he is creating a pool of assets. So the AIF is creating a pool of assets. And let me say that when I said the rich and you said AIF and we spoke about 1 crore ticket size, right? Try buying a big house and I want to know how much money you have to shell out. Is it going to be more than 1 or it's less than? So if you are parking 1 crore as a starting amount, and if you get pool of 10 assets in different cities, different units, right? So I think that it's actually you're getting it diversification in 1 crore, whereas many times in real estate, perhaps with 1 crore, you may not be able to buy even a single asset that aspirationally you want to buy, for example.
Yeah, and here, like, you don't have to really manage anything. Somebody will manage for you.
Somebody is managing it for you. Just like mutual funds, just like PMS. There is a professional
that is also a good way of doing it, because now when we build a flat and maybe be it a Bangalore or be it even Kochi also, like a second home and
Correct.
for a rental property, it's a 1 crore kind of investment you need.
Correct.
And even if that is not given for rental, you have to end up paying maintenance fees.
Yes.
So here you don't have
Even if it's given for rental, you still have to pay the maintenance.
yeah, so that means your actual rental yield is minus
Of course.
maintenance plus any annual that tenant is making something, that also it end up doing that. So but it's a good. And another AIF which you are talking about is that the high yield credits which you give, right?
Right.
So how different is from debt mutual funds or FD kind of an instrument in this?
Okay, so basically what we would do into a few of the products that we would have launched is that we will identify set of companies, set of promoters where we'll be very comfortable in terms of lending money against collateral, against cash flows. And I'm talking very layman's language. And then the second question that you should have is that then why are they paying you a rate of interest which looks higher than conventional traditional bank deposit, for example? Is because there are 2-3 elements to it that look for the purpose that they want to borrow and the collaterals that they have, right? There are not many avenues or many source of lending for them, and this becomes a source of funding for them. They are happy to pay you that kind of a rate, right? And from us as a manufacturer, what we will think is that, look, as far as you are investing asset backed, you're investing where you have cash flows, where in debt one thing is very, very clear that we think as a house, that the return of capital. So where you have return of capital kind of a situation, you will lend. So what happens is that there is a section where for regulatory reasons, for various other reasons, the source of funding is only from here or largely from here. You come and identify that space and you go and lend in that space.
Okay. Understood. And so basically, you have the control of understanding of promoters and
the complete due diligence that
you studied and
you will do on the entire lending paper or whoever you are lending to. You will complete.
Good. So when we spoke about how rich invest, but there are aspirational rich are there. So for example, if a person is investing 10 lakh rupees now,
right,
and they are ready to invest SIP route and everything, but in 5 years, 10 years time, they want to create a pretty decent wealth. So what is the kind of behavior they should show in order to get that kind of wealth according to you?
So I think that two things that you should give away. First of all, I think instead of saying what should I do, I will say what I should not do.
Okay.
Right? Is that give up on greed. So you said that there was one trait that you spoke about. People investing in real estate, people investing in gold, and they want to make quick returns. The word that you used was quick returns. Right? First, you have to write down that, look, there is nothing called as quick returns. If sometimes it happens, it is a factor of either you were very lucky or you really had the vision to buy a asset class or a product when you truly believed that it is so undervalued and things happened and the valuation came back. Right? So don't be in a hurry. Don't chase past. Behaviorally, the biggest decision maker for most of the investors is what happened in past. So more people want to buy gold and silver after it's moved up 60%. Right? So that is something that one should avoid. That look, because it is past, does not necessarily get repeated. And third is that there will be distractions that will come. So in that whole journey, as I said that, you've 10,000, 15,000 families, you said, right?
Yeah.
Your job is to say that distractions will come and I'll have to tell you that there's a distraction. Do not worry, stay on course. So they need to maybe latch on to somebody to ensure that distractions are ironed by that person.
No, that always happens. Distraction happens, and too many questions about distraction. We also get tense. That is another issue. But the good thing is that we will have a healthy discussions. So there they also will, and these guys are like have an idea. And another good thing about most of the clients they build in SIP. Right. And in SIP, one good thing is that everyone will get matured. It's not like a quick money, like a lottery.
Correct.
So that way, that discussion always have a maturity, and they will be giving more idea about how is their job, how is their income, and when is their goals are getting need to achieve and all this. So that is another good thing, good advantage we have.
Right.
Yeah. Right. So what will be your final advice to the audience? You understood from my questions and our discussion also.
Sure.
What Money Talks with Nikhil will be following their principles. So with your experience of 25 years and with your experience of ICICI Pru managing mutual fund plus alternatives, so what will be your advice for our audience today?
Sure. So I'll quickly put it down that discipline.
Okay.
Don't let it go. Asset allocation, I reinstate. It's extremely important. It will be different from people to people, and let when you handle those 15,000, let you try to manage that or advise them, right? So asset allocation, and if you are confused, please take advice. I genuinely think that, look, there is nothing wrong in taking advice. And if you start believing that the advice is nice, then there's nothing wrong in acting on that advice. So discipline, asset allocation, 100% for your behavior. Have somebody to watch out for you. And do not get obsessed, or I would say obsessed is a very strong word, but attached to a asset class, or this is the only way to invest.
Okay.
If I can think of debt, then this is the only way to invest. No, there are different ways to buy debt.
Okay.
If I can think of precious metal, there are ways to buy it. If I can think of equity, right? So we just spoke about SIP, mutual fund. We can move to PMS. We can move to AIF. We can move to different ways. So I think that one should not just get attached to this is the only way to do it.
Okay.
Right? There are various ways. Let somebody advise you to evaluate what is the best way for you. What suits you the most, your temperament, your tax structure, your life cycle, your asset allocation. So those are few simple advices that I would say.
It's nice conversation, and thanks a lot.
Thank you
to share your wisdom today, and looking forward to meet you again.
Compliments to what you're doing. I think all you're ensuring that the literacy or awareness, whichever is the right word, is actually increasing. So thank you so much for doing this for all our end consumers and customers.
Thank you, sir.
Thank you.